This video is for educational purposes only and is not financial advice. I am not a financial advisor. Investing involves risk, including loss of capital. Any tools or strategies mentioned do not guarantee profits or future results.
OpenAI could become one of the biggest IPOs in history. Not just another tech IPO. We're talking about a company that many analysts believe could eventually be worth hundreds of billions of dollars, or even more. And if that happens, millions of investors will rush to buy shares the moment they become available. But here's the problem. By the time most people hear about a major IPO, the biggest gains may have already happened. Think about some of the most successful technology companies ever. Amazon, Google, Apple, Nvidia. The investors who made life-changing returns weren't the ones who discovered these companies years after they became household names. They got involved early, which raises an interesting question. If OpenAI is still private, is there any way for ordinary investors to position themselves before a potential IPO? That's the idea behind a controversial investment thesis currently making the rounds on Wall Street. The theory is simple. Even though you can't directly buy OpenAI shares today, there are publicly traded companies that have exposure to OpenAI through investments, partnerships, ownership stakes, or other indirect connections. If OpenAI's valuation continues rising ahead of a future IPO, those public companies could potentially benefit as well. In other words, instead of waiting for the IPO itself, some investors are looking for ways to gain exposure before the crowd arrives. Now, before we go further, let's be clear. OpenAI has not officially filed for an IPO. There is no public filing, no official IPO date, and no guarantee that an IPO happens anytime soon. However, supporters of this thesis point to several developments that they believe suggest the company is preparing for a future public listing. OpenAI has gone through significant corporate restructuring. The company has expanded its leadership team. It has become increasingly focused on revenue generation, and it has expanded its presence in Washington as artificial intelligence becomes a major policy issue. None of these things guarantee an IPO, but they have fueled speculation that OpenAI may eventually enter public markets. And if that happens, demand could be enormous. After all, ChatGPT became one of the fastest growing consumer applications in history. Today, OpenAI sits at the center of the artificial intelligence revolution. The company is influencing software, search, education, healthcare, finance, and countless other industries. That's why some analysts believe an OpenAI IPO could become one of the most closely watched public offerings ever. One investor who has been discussing this opportunity extensively is Luke Lango. Lango believes that waiting for the IPO itself may not be the best strategy. Instead, he's focused on identifying publicly traded companies that could benefit from OpenAI's growth before any IPO announcement becomes mainstream news. According to his research, one particular stock trading below $10 could provide indirect exposure to OpenAI's future valuation growth. That stock forms the centerpiece of his latest investment thesis. The research is being offered through his Innovation Investor service. Innovation Investor focuses primarily on emerging technologies, artificial intelligence, disruptive innovation, and high-growth stocks. The service includes monthly stock recommendations, a model portfolio, daily market commentary, weekly updates, urgent alerts, and an archive of previous research. One thing that separates this promotion from many AI pitches is that it isn't really about ChatGPT itself. It's about identifying second-order opportunities. The company's positioned around major technological breakthroughs rather than the breakthrough company alone. Lango argues that some of the biggest investment winners often come from businesses supplying, supporting, financing, or benefiting from transformational technologies. Whether that's true in the case of OpenAI remains to be seen. The challenge with any pre-IPO strategy is uncertainty. The IPO may happen later than expected. Valuations may change. Market conditions may shift. And the indirect exposure stock may not perform the way investors hope. That's why this type of opportunity tends to appeal more to aggressive growth investors than conservative income-focused investors. As for the service itself, Innovation Investor currently costs $49 for the first year and includes the OpenAI related report, along with several additional research reports focused on potential future IPO opportunities involving companies like SpaceX and Anduril. So, is the OpenAI Mega IPO thesis worth paying attention to? The answer depends on how you view artificial intelligence. If AI becomes as transformative as many believe, OpenAI could eventually become one of the most valuable technology companies in the world.